Hi, I'm Duncan Davidson, founder and managing director of Bullpen Capital, a seed fund in Silicon Valley. So Bullpen Capital is a baseball name, and it may not translate well over to Australia. I've tried to think of a cricket analogy, can't quite come up with one. It was named by a professional baseball player who's a relief pitcher. And the way baseball works, the starting pitcher or bowler pitches as long as they can before they get blown out of the game. And the next pitcher comes in from what's called the bullpen. It's usually a spot in the baseball park that looks like it's where you used to keep the bulls out in the cow pasture. So that's how we got our name. And the reason we named it that is our role in the ecosystem. What you may not imagine about the U.S. is how deep and rich the venture ecosystem is. There's been a complete disruption of the venture industry by what's called the lean finance model. It used to be you had to raise money from a Series A firm, $5 million to get your product to market. You don't need to do that now. Now, on a much less money, you can launch a product to the internet or mobile. And in that ecosystem, there was a role for somebody to do what Bullpen does. We are like the relief pitcher. The seed funds are the starting pitcher, and we come out of the bullpen to keep the company lean and extend its life before it can score a big round from a traditional venture fund. The problem you run into in Australia with venture capital industry is liquidity. Let me explain what I mean by that term. A normal venture fund in Australia might do something like 17 or 20 deals over 4 or 5 years as part of their fund. Do the math. They're doing maybe 4 deals, maybe 5 deals a year. In the United States, in this new lean venture ecosystem, some of the funds, you might call them hyperactive, do 40 deals a year, not 4. That provides 10 times the flow of money into the marketplace. Liquidity is not just the amount of money, it's also how fast it turns over. In addition, in the U.S., a lot of these venture funds seek deals that either go public quickly or get bought quickly. So the liquidity also comes from the money being returned to investors and funneled back into the market. In Australia, it feels very slow compared to how it feels in the United States. Now, this changes everything. If you had more liquidity of this sort, 10 times the amount of deals being done in the Australian ecosystem, it would pull everything along with it. When I go to Australia and meet people there, I find that people every bit as educated and as smart and knowledgeable as those in the U.S., except they're in an ecosystem which slows them down. A lot of times the investors will say to them, I'd like to put in a little bit of money, help you get to break even. Don't take a big risk, because that's what you do in a market with no liquidity. That venture fund doesn't think there's follow-on money, wants to make their money last. In America, we don't think that way. If you come to us and say, I want a little bit of money to get to break even, we kick you out of the room. I don't want break even. I want a public company. I want a big success. I want you to go for glory. So our whole attitude is different, and we pull everybody through the ecosystem this way because they assume there'll be liquidity and follow-on funding if they're succeeding. In the United States, they've counted something like 85 active traditional venture funds. But we at Bullpen have counted around 85 active new breed of lean funds. So the lean industry, just in the last few years, has evolved to be every bit as big in terms of numbers of funds as traditional venture. But they play the game differently. So they start off with incubators, accelerators, friends and family, and angels who tend to be rich individuals out of Google or Facebook who put the money back into a company. Then it goes to professional seed funds, institutional seed funds. You tend to do about $1 million round. That in a way is the new A round, but it's much easier to get. After that $1 million round, there usually is a step-up round, a bullpen round, in between that seed funding and getting really big money. That's where we play. Now, my recommendation of the Australian companies coming to America is twofold. First, get more money in Australia before you come. So you're not coming running out of money. You're coming with capital in your back pocket. And don't just come here to hoof it down the street and meet venture people. Come here for 3 months, get to know the lay of the land, network into the community, figure out who you should talk to, and then go talk to people. So the money in Australia should give you enough time to go through that process. Final point, you don't have to raise a $5 million A. You may be in a situation where you've raised $1 million in Australia, your product's on the market, it's showing some success. You need a little more time to prove out a business model to open up the U.S. Go raise that money from a U.S. fund, and maybe you can even skip the A and go to the shovel-in if you're successful.